I'm not sure whether to be excited or shocked and really concerned after this Fed meeting. No, not because of the economy, but because of what the Fed did not say. Now, we'll talk about what they did not say in just a moment, which is absolutely ridiculous. But more importantly, right now, we'll focus on what happened today. Okay, so let's go through it, just like we've got it at ehack.com. It's all broken out, and I will, of course, give you some added context. Fed rates stay unchanged. Really weird. Two things they did here, though. They removed that the banking system is sound and resilient. They removed that. They removed comments about tighter financial conditions because financial conditions have loosened. And they removed commentary about the potential for additional monetary policy firming. They removed that and changed that turned that into in considering any adjustments to the target range for the Fed funds rate. The committee will continue to assess incoming data. Okay, fantastic. So what's interesting here is Jerome Powell said a few things that were quite bullish at the beginning of the meeting. Beginning of the meeting starts off bullish. We're well into restrictive territory. We've been below trend on job gains in the prior few months compared to the months before that. That was interesting to me because we've obviously talked about the idea of loosening labor markets and the potential that there's more of a balance now towards making sure we're not causing unnecessary employment. Jerome Powell, it's almost like he wanted to cut already. And so he's sending these little signals, but he's not allowed to because they're trying to use the March meeting as their signaling tool. Think about this for a moment, okay? We'll draw this out really quick, but this is what I think they're doing. They're saying, here you go. We're going to go into the January meeting and we're going to punt in January. Then we're going to go into the March meeting, and what we're going to do is we're going to give an updated summary of projections. So we're going to punt January, which was expected. We're going to punt March, but we're going to give the market maybe a dovish summary of economic projections, right? So you take the two CPI and the two job reports. You take those, and if you need to cut, you can, but you probably just give a dovish SEP, summary of economic projections. Then he answered the question very clearly, hey, if interest rates stay the way they are, or rather inflation stays the way it has been on the 6 month, which is 1.9%, then policy would be in a different place today, absolutely. That is a quote of his. So if we stay on the trend we're on now, rates are way lower, okay? The question is, will we stay on the 6 month path? And in order for them to feel comfortable of that, we are going to punt January, give a summary of economic projections for March, and then May 1 is probably going to be the more likely cut time. Keep in mind, Jerome Powell said that March is not the base case. So March is not the base case for a rate cut. Made that very clear. Some of the other things he noted. Labor demand is exceeding the supply of workers. He did in his speech a few times dodge the 6 month PCE. I think the reason he dodged the 6 month PCE multiple times, which you could see on this chart, the 6 month PCE is right here, this like orange line, it's 1.9%. The 3 month is like 1.6%. So I think the reason Jerome Powell dodges the 6 and the 3 month is because he has his prescription from all the other people at the Fed, and they're like, look, man, you need to bias until May, okay? Whatever you need to say, bias until May. Every other frickin' meeting, Jay Powell comes up there, he's like, inflation on the 12 month is this, on the 6 month is this, on the 3 months it's this. This time, yeah, inflation on the 12 month is still elevated. And then goes dark. He knows this is happening. So somehow he's trying to buy time for the other members of the Fed, kicking this can down to May. And I think I figured it out. Now, what scares me, and this is the part that scares me, I too thought May was more likely until they decided they would end the bank term funding program. So I thought they're going to cut in May, it's not going to be March. Then they end the bank term funding program, and I'm like, ooh, ending the bank term funding program, you're going to end up having to cut in March. Then what happens today? New York Community Bank collapses 37%. If you haven't seen my video on it yet, it's a big deal. The freaking stock's still down 37%. This is a massive bank. This is a bank that has over $80 billion in customer deposits, and it's down 37% on the day. They're losing more money quarter over quarter. They're taking more losses, and they don't have any more cash to pay out based on my reading. Okay, watch the video. I have a full video on the channel about it. The New York Community Bank, another big bank failure, is in the brewing. But this is what actually gets really scary, is Jerome Powell's basically like, what banking crisis? We're going to cut in May, not March. Not only that, not a single reporter, okay? Not a single freaking reporter asked about the fact that from the statement they removed, quote, the banking system is sound and resilient. So they remove the banking system is sound and resilient. Then after removing the banking system is sound and resilient, what did I just tweet on Twitter, on X? I wrote, what the F? Not a single question on bank stability at today's Fed meeting after New York Community Bank / Flagstar plummets 37% and the Fed removes banking as sound and resilient from their statement. And I go, were the reporters instructed not to ask about banking, or were they blind? So they're either dumb and blind, or they were asked not to ask about banking, because this is a big deal. So maybe somebody woke up this morning like, I only have to do the Fed meeting today. I'm going to stop doing any kind of research. This is crazy. Absolutely nuts. Okay, anyway, going back to eHack. Oh, quickly, before I mention eHack, did you know that we have a coupon code expiring today? You could get the gold membership, the how to make more money with productivity and AI. How does Kevin get done so much? I give all my secrets in gold and the AI course. Stocks and psychology of money with buy-sell alerts, 0 to millionaire real estate investing, do-it-yourself property management, be a real estate agent like Kevin, or make videos like Kevin does on YouTube, whatever. All of them available. We do have a price increase happening tonight at midnight, so if you want to get in, make sure to check these out. You get lifetime access to the course member live streams, and when I add new lectures, you get those as well. Okay, so what else? Jerome Powell says, we thought we needed a softening economy. Now, this was bullish. He says, we thought we needed a softening economy, but we might not need a softening economy. And if we cut too late, we could end up hurting the economy too much. We have confidence in the economy, but we want greater confidence on inflation. He refused to give how much time that greater confidence would be. Does he need 7 months, 8 months, 10 months, 12 months of data? What does he need? Because he makes it clear that the 6-month path of inflation right now is good. And he made that clear later. He did mention the stock market started selling off after he mentioned this. He mentioned that, hey, we're not declaring victory. There's still some healing going on in labor and the supply chain side, and we have no idea exactly where things are going to go and if they're going to disrupt inflation. His worry is that if inflation anchors above 2% on the 12-month, then we have to hike more or stay higher for longer, right? Basically stay at 5.254 longer. If inflation anchors below 2%, he says that would not be what we would want, and that would basically imply rate cuts. He's asked, is asked sort of about a summary of the economy, and he says, look, growth is still strong. Labor market indicates the labor market is strong. 2 years of labor market under 4%. That hasn't happened in 50 years. 6 months of good inflation data. This is a good situation. Let's be honest. This is good. But there is a chance we could see growth moderate, which hasn't happened yet. There is a chance we could see more pain in the labor market. And there's no guarantee that 12-month inflation will come down. So he's really looking at that 12-month to be convinced that it's down. Does that mean he's going to wait 6 months? Probably not, because he would go too far. Now, this is shocking. We did not end up getting bingo. We got a lot of items here, but we did not get bingo today. We did not hear anything about that banking sound and resilient. Otherwise, we would have had bingo. He said that every freaking meeting. That should have been an easy one. Didn't talk about New York Community Bank, Red Sea, geopolitics, manufacturing, China, Germany, nothing. The only thing we talked about at this meeting was basically PCE over and over and over again. We didn't even talk about the bank term funding program. Bro, this is like critical information. Are the banks going to owe all of their money back at the bank term funding program's expiration? Because if they owe it all back, we're going to have a banking crisis. Are they going to get loan extensions? Are they going to have some kind of repayment period? What if a bank needs help afterwards? But these are important questions. This is like the first time I'm like pulling my hair out going, bro, why are these questions like mental? These were so bad. I don't get it. So either the Fed is trying to like hide the banking issue and the bank term funding crisis, or they're blind to it. And I don't know which one's more scary, that it's being censored or people are blind to the problem. I don't know, but it's a problem. Regarding March, he made it clear that March is not the base case. We already touched on that. The reverse repo facility does not have to go to zero to start having cuts. And yes, you could have cuts with QT. Okay, great. So now the big question is, what happens? All right, here's what's going to happen. The market needs to unprice the rate cut for March. So we're going to go from a coin toss to like 20%, okay? That's why the market is red. The market's going to have to absorb that we have to wait 6 more weeks between March 20th and May 1st for the rate cut. Big deal. It's 25 basis points for 6 weeks. Suck it. It's not that big of a deal. But the market is going to have to eat that up. And so the market's going to have a little bit of an adjustment here. Once we finally unprice the March rate cut, then we need to pay attention to the banks, the rest of earnings, and then we just sit here and pray. And within the next probably 2 weeks, we're expecting to fundraise for househack.com. Again, if you want more updates on the real estate startup, there's a link down below. We have another update video that we posted about a week ago, and we'll have another one coming out soon. Go to ehack.com to see my full summary on pretty much the research that we do or some of the things that we're paying attention to. And then, of course, go to meetkevin.com to check out that coupon code for the courses on building your wealth and access to those course member live streams. In the meantime, huge thank you. Really appreciate all of you. It's it's been a ride the last few years. And the fact that, somewhere around 22,000 of y'all chose at the same time to hang out with me is pretty remarkable. So as a thank you,
go yourself. Is that fair?
All right, I had to do it. Anyway, that's the Fed update. Thanks so much. I'm going to pay attention to the banks now. If you haven't watched the rest of the bank videos, go watch the bank videos. Join me in the Market Open live stream.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage the ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker.